And that is what you need to become a consistently profitable trader. What's going on, people? Welcome back to another YouTube video. So today I want to keep this somewhat short and sweet, and I want to be straight to the point because this is a video that's going to actually massively help out your trading game. And this tip here that I'm going to give you guys helped me go from constantly losing money in the markets to actually becoming a consistently profitable trader. And I believe this will massively help your guys' game. Now, so for me, when a lot of people are struggling in trading, the main reason that they're not doing well is because they're constantly trying to predict the markets. They see price come into a trend line, a support and resistance, a Fibonacci level, and they instantly do something. They instantly expect that the market is going to do something around their key level or whatever technicals that they've drawn up. But that's not the way that you become a consistently profitable trader. You have to eliminate all prediction of the markets, and you have to be fully in the zone and just be in flow and reacting to what you're seeing, as opposed to constantly trying to predict everything. If you're a trader right now who maybe you trade support and resistance, and whenever price comes into support and resistance, you instantly do something. You don't wait for the markets to tell you that that's going to hold. Then this video is for you. And even if you're someone who's maybe constantly taking losses and you're seeing no progression in your trading journey, I really hope and think that this video is going to help you. So without further ado, let's just jump straight on the charts and show you guys these key points. Okay, so for this example, I'm going to be using GJ on the 15-minute time frame. You can use this on whichever time frame that you want to use, whether you're a day trader or a swing trader or whatever FX pair that you may trade. This will be applicable to all. So as we can see, we've got GJ coming down into a level of support, and this could be a trend line or it could be a fib. I'll give examples of all the other ones as we progress from this one as well. So you're looking at this and you're going to say to yourself, okay, when price comes down here, what I'm going to do is I'm going to go long because it's a level of support, and I'm going to put my stops just below, and I'm going to look for this really big play up. Now we fast forward. Look at that. Price comes down and stops you out. And this is what happens. You think price is going to react from this level. And it's okay to think that. You can have your technicals drawn up and you can watch for things that you make think happen. But don't just execute the second that it comes into that level of support and resistance without waiting for some sort of reaction. And that is the key. So many people fail in trading because they react and they think that price is going to do something. And then when it doesn't happen and they get stopped out, they get incredibly emotional before it then moves back in their favor anyway. So this is what happens here. Retail see this level of support, could have drawn all the way down here. They have their stop somewhere just down there. Maybe they have their stop below that previous low. And without waiting for any sort of reaction or any sort of confirmation that price has to respect this level, they instantly take the buy. It doesn't push up as they expected. And then you get upset and you get annoyed. This is exactly the same point of when I'm trading Fibonacci's, I have advanced Fibonacci levels, and people say to me, Aaron, how do you know which Fibonacci level it's going to react off? And how do you know at what point of a trend line is price going to react off? And the answer is, I don't. I have no idea where it's going to react off. And that's what I truly believe separates me from 99% of failing retail traders who fail in the beginning, as did I fail in the beginning, is I would predict too much. I would see trend line, support, resistance, fibs, whatever it may be that you may trade. I would see that and I would instantly do something off of that, expecting something to happen. So the key word here is expecting. Stop expecting things to happen. Let the market tell you if it's going to respect this level of support. Let the market tell you if it's going to react from which Fibonacci level. I don't know if price is going to bounce on this level or price is going to push up. All I'm going to do is I'm going to sit on my hands and wait for price to get into that level, and I'm going to watch to see how it reacts. And if I get a nice bounce out of that level, amazing, I'll take the trade. But what I won't do is execute the second that it comes into that. And that's the key. So I'll show you guys some more examples, because I truly, truly believe that changing this little thing up, which may seem so obvious and so simple, genuinely will have a positive impact on your trading journey. So look, let's just fast forward GJ. Look at that. We had a stop hunt. We had a massive push back down. And if we fast forward it, look what happened. We shot straight back up to TP. And if this is you and this keeps happening, that's because you're not waiting for the reactions. Price could have easily just broke this level, retested, and just went short. And I wouldn't have done anything. And I wouldn't care if it goes short. If I'm looking for longs, I'm waiting for a reaction. And right here is the reaction that we like. If you look at this, 15-minute closed, incredibly bearish. We came down, we took out these lows here, so it's a really nice retail trap. Price closed with a nice strong 15-minute candle, came back down for the retest, confirming that anywhere in this area, buyers are clearly stepping into the markets, and I'm waiting for a reaction. Now, there's different ways that you can approach this. The way that I kind of have two entries as to how I would approach this. I would have a retest entry and I would have a momentum entry. So in terms of a retest entry, I would be waiting for a liquidity grab, a reaction, and then the entry with my stops below the liquidity grab, looking to play out for the highs. You can trade it like that, but again, this could just be initial reaction and we then could roll over again. So you have to backtest them and see which one works best for you. Now, the one that I like doing is a potential momentum trade where I wait for price to break the high, and maybe I'll be waiting for price to break this high here. So maybe I'll be waiting for price to break this high, or I'll be waiting for price to break this high. Waiting for price to break this high with strong volume and momentum is probably the most confirmed move. So I'd wait for that. I'll put my stop below there, and then I'd play it all the way back up there. My ideal entry is the retail trap, the reaction, the retest, best risk to reward, and it also gives an incredible win rate. I think in November just gone, my win rate for the NASDAQ was around 75%, which is just absolutely incredible. November was a fantastic month. So hopefully you guys will start to have better months in the markets by implementing these things here. Now, let's show you guys another example if you maybe trade trend lines. Now, just to give you guys another example, different time frame, different pair. This is gold on the daily time frame. We can see we got gold coming for this 1, 2, coming in for that third touch of the trend line. Now, if you use trend lines and you see price coming into the third touch of the trend line, stop, because third touches of trend lines don't work. But if you do want to trade trend lines, the way I use trend lines is looking at them as points of liquidity. I think a lot of retail traders, again, will be looking at this. They'll see the third touch of the trend line, and they'll basically draw their risk reward tool like this. They'll say, when price comes into the third touch of the trend line, I'm going to do this, regardless of the reaction. As soon as price comes into that third touch of the trend line, I'm going to take a sell. Now, what happens? Let's go on to 4 hourly so we can see this properly. Look at that. 4 hourly shoots up massively, breaks the trend line, and then look at that. Retail traders get stopped out. Before then, price absolutely shoots off even higher. Now look at this on the daily time frame. Completely broke the trend line and shot even higher. So this is an amazing thing, and this is why I want to show you guys this example. This is an amazing thing so not only will this help you eliminate the prediction of the markets, but this will also help you from not taking as many losses. If I'm, for whatever reason, I've got confluences and I'm looking for gold sells around this region. If I don't get a reaction in my favor, not only am I not going to take a loss, but I'm also going to save myself from not executing another position because price hasn't given me the confirmation. So there's no need for me to jump the gun, take a trade, take a loss, and be emotional and burnt out. Again, if we had a nice reaction from this trend line and price was showing that it was having a nice reaction, we started to break some higher lows on the lower time frame, amazing. I'm going to take the reaction off this trend line. But until we do that, I'm not going to do that. And this is what I would do time and time again. And this is the reason I went from losing constant money in the markets to eventually being able to, prove to myself that I can trade on a consistent, profitable basis, is by eliminating all prediction of the markets. If you want to become a consistently profitable trader, you have to learn to react. And the way that you do that is by doing things like this, as well as, using hedges and using anchors and eliminating as much of the prediction game as possible. And I know, don't get me wrong, everyone wants to draw the fancy technicals and they want to see their technicals play out. But the game here in this trading journey isn't about being right or wrong. You will never be right or wrong with the markets. You will never beat the markets. You just have to learn to be in flow with them and stop trying to predict them so much. Because that's the reason you keep getting emotional and you keep losing money and you keep getting burnt out, because you're expecting things to happen. And when these things don't happen, you not only lose money, but you're incredibly emotional. And then you do the exact same thing again. You just keep taking loss after loss after loss. I won't show you guys a fib example because you can already probably paint the picture of what I'm going to talk about. But if you use Fibonacci, which I do, and let's just say, for example, you're looking to go short of the 78 fib. Price comes into the 78 fib, it closes incredibly bullish. You don't get a reaction, no trade. You get a reaction? Amazing. Let's go down to lower time frames. Are we breaking higher lows? Are we breaking structure? If the answer is yes, amazing. Take the trade. But until that happens, don't take the trade. If you see price coming into a level of support and resistance and you want to go long, wait. Trust me, it's going to save you a lot of losses and it's going to save you a lot of money. And just by implementing this little trick here, I can almost guarantee you that you will start having more success. I think most failing traders, myself included in the beginning, that come to me and say and they're not making money is because of the pure prediction of the markets. Okay, so I'll keep this short and sweet, but remember guys, keep this in the back of your mind when you go into the trading week next week. Stop trying to predict the markets, learn to react. And that is what you need to become a consistently profitable trader. Now, hope you guys have a fantastic trading week next week. Implement this. Let me know if it's helped you. I hope it has, and I'm sure that it will. And this is more value than your Forex guru mentor is selling you in his course. So hope you guys did enjoy this video. If you did, remember, leave a like, comment, subscribe, all of that good stuff, and I'll catch you all in the next one. Peace.